Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Soo-young, Professor of Finance at Chung-Ang University. Professor Soo, good afternoon. Thank you for coming back on the program.
Yeah, good afternoon to you, Devin, and thank you for inviting me.
Our pleasure. It seems like the Federal Reserve could be slowing down the pace of its interest rate hikes. Looking at the minutes from the Fed's November meeting, report says a majority of the participants thought that would soon be appropriate. What do you see happening at the Fed, and what do you make of these minutes?
Yeah, recently disclosed the Federal Reserve Board minutes. The meeting was held in November 3rd. So it's just a 2 week or 3 weeks ago, but still it matters. What matters is that even at that time, the board members have agreed almost unanimously that they are aware of the potential declining of the economic growth rate, and then the rate hike would be a much bigger burden to the economy. So they would like to consider the slow rate hike. So that is actually realized, that it will be realized, and there is the uncertainty about the rate hike. The magnitude of rate hike is removed. That's why we have seen the positive market response in Wall Street. That's what we see right now.
A positive response indeed. This talk of smaller rate hikes sent stocks in the U.S. higher overnight. The stock market, of course, will be closed for Thanksgiving on Thursday and Friday, but S&P up again, closing above 4,000 points, the first time since September. What's the story in the global equity markets?
Yeah, when I look at the data, then the September 13th is the last day when the S&P 500 has been dropped from the 4,000 index the level. Right now, the S&P, the positive market response is mainly due to the not just because of the smaller magnitude of the rate hike, but actually the minutes has demonstrated that there is unanimous, and also the board members they are concerned about, they have agreed with the idea or opinion about the economic slow growth rate. And so that's why, to that regard, clearly the 0.5 percentage point in rate hike would be the maximum. And then the market could expect lower than that. So to that regard, the uncertainty has been cleared. That's why we have seen that the positive response and the hike of the S&P 500 and Dow Jones Industrial Average in U.S. market.
Right, and Korean stocks were higher today, too. Many of the same factors at play, with a smaller rate hike today, also from the Bank of Korea. The dollar weakening quite a bit, so the exchange rates come down significantly. Now, virtually all the big names were higher today, especially battery-related shares and tech. Tell us about the domestic market.
Yeah, clearly the positive response in the Korean market actually even they have the Kospi index and the Kosdaq had shown the positive increase or increment before the Bank of Korea's determination of the rate hike as much as 0.25 percentage point. So that implies that is already reflected, and it shows that sign in the decrease of the exchange rate. I mean, the currency Korean won against the U.S. dollar has been dropped minus 1.81 percentage, whose equivalent is 1,327.5 Korean won against the $1 US. So that means the foreign capital is flown into, they decided to flow into Korean market. That is why we have seen that this increment of the capital market, Kospi index, accompanied by the declining the exchange rate. So this tells us, as you mentioned, the LG Energy and the Samsung SDI, those two big companies, the stocks, has become a target of a foreign capital inflow. So that implies that the Korean market clearly is regarded as by the foreign investors as some potential safe haven, and also as long as they would like to, they expect some appreciation of Korean won, and the growth rate would be recovered than they expected. So even though the market forecasters currently, given the current condition, the 2023 economic growth rate in Korea is estimated to be 1.7%. Clearly, it is very low, but that is given the current conditions. So later on, we are going to see that when the government policies or Bank of Korea's policy could affect some positive, affect the Korean economy positively, then we might have a little bit better and positive prospect in upcoming years of 2023.
Right, you never can be sure. It seems like foreign investors have seen some opportunities here in Korea lately. Well, Professor, we'll have to leave it there for today. Thank you, as always, for coming on the program. We really appreciate it.
Yeah, thank you, and my pleasure.